I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Whew, there's the position disclosure. I'm backing a little Tesla feeler. We'll see what happens with it. Did not bounce well with the market into the close. Small. Oh man, what a crazy day. What a crazy, crazy, crazy day. Just when you thought maybe 2022 was going to relax a little bit, and what's just been the most insane year in some ways I can remember. I mean, COVID was crazier. I'll still say COVID was crazier, but COVID, that crash was just so much more shorter-lived than what we've seen this year. What a turnaround today. Even with that turnaround, we closed down 1.5% for the S&P, 2.5% for the NASDAQ, and 1.3% for the IWM. I'm not even sure what percentage we were down at lows. We were down another $6 from where we closed at lows and the SPYs at one point today. Today was crazy. Completely nuts. So, we had this like 6-day sell-off here, whatever it was. We had a rest day 2 days ago. We had the bounce back day yesterday. We got to the ADMA on the upside yesterday. I was planning on coming in with a game plan today where we could look for shorts. Shorting, before 8:30, we were set for a very small common gap down. The game plan was going to be basically looking for shorts on the intraday or shorts versus kind of yesterday's high. To take advantage of the fact that we're in a bearish market. We got to snap back to equilibrium, especially if you can get the signals on the smaller time frame. That's what the game plan was. And somebody just confirmed that I am on the radio because no one said hello. There we go. Thanks, Sean. So that's what the game plan was. And then I honestly got super messed up at 8:30 when that number hit. And the way we sold off on that number at 8:30, we got the updated GDP, we got the unemployment number. We just sank down here real hard, and we erased pre-market most of yesterday's gain. Which this open here at yesterday's low, or right in front of yesterday's low, is so much more of a difficult short than if we're opening up kind of near where we closed yesterday. You could be thinking, looking for shorts versus a gap fill, or looking at shorts versus the previous day high or something like that. And then, we end up gapping down here, and I'm like, well, what does this mean? Like, can I still short? I'm not sure I want to chase. Let's see how, now we have some extension to the downside. I should probably wait and see how that extension gets handled. Should I be looking at longs versus like yesterday's low into this area? That pre-market move really just kind of, to be totally honest with you guys, like really messed up my game plan. And then on top of that, first 5-10 minutes of the day here was just massive selling on the downside that just really wasn't given any setup to let people sneak in. I think that this short off the open is honestly almost impossible. Because the move was pre-market, and then we're opening there, and we're immediately hitting kind of that next down leg. Probably the easiest, best short of the day was this bear flag. I remember looking for a bounce here because of the degree of extension at this time of the day on the 5-minute chart as per usual, and we're just completely going sideways. And I'm watching this market to see if it can break up on the intraday resistance. And the Qs, I remember seeing these Qs break up, and then on this next bar immediately start coming back in. And I was like, oh, that's not good. Like, it's 10 a.m. now. We just tried to break up out of this bearish consolidation because of the extension here, and we're immediately coming back into the zone like that. At one point I was looking at almost the opposite for the IWM. Like, if the IWM can break here and then come back up, that could be that opposite signal where we break here but we don't get continuation because of the extension, that we actually get the move higher. The Qs were trying to lead that move higher. I don't like when the Qs lead because the IWM was relatively weak, and then that actually led to a breakdown of that bearish consolidation. That's the short of the day. If you were able to pull that trade off, I think that's the best setup that was out there. It was actually shorting at 10 a.m. I didn't get the trade. I was doing some battle with Tesla at that point in time. This Tesla extension off this hammer, I was going long off that. I caught this pivot here. If you remember, on this 945 candle, I called out a long for very tight risk, basically back through the previous candle's low, like 132.50 versus 132.27. I got 132.57 as the entry, so I had, whatever that was, 30 cents worth of risk. I got the pop to get my risk covered. I sold some more at like 133.50. I had another offer at 134, or just in front of 134, that did not get filled into this pop. Then that trade came in, and I got stopped out of my momentum trade that I was trying to do. Like I was saying, I had a little feeler. I'm waiting for the signal to get heavier. I thought I had the signal to get heavier. I got heavier, covered the risk, sold a little bit more, and then got stopped out. Kept that feeler on. I bled out on that feeler all day. It's very, very small, but I bled out on that feeler all day. I was not adding that back in here. I didn't do any other executions. Pat had phenomenal patience and a phenomenal call out, only beginning to go long beneath 125, recognizing the exhaustion coming in with the volume and this hammer. And even with that great call out, the snapback on this was very weak. But this entire market's just getting destroyed, working its way down. I got no shorts on. Even though my game plan today was to try to be a little bit more aggressive on the short side of the market, I was very frustrated at one point, getting a text message from my wife that someone is harassing her on the corner near my apartment, and I'm just watching my P&L be down by a down payment on a house, and I'm like, do I go back up to my apartment right now and kick this guy's butt because I'm furious, and I just take it out on some jerk who is harassing my wife? I was very, very tempted to do that at one point. Probably would have been bad. If I was working from home today, it would have been bad. But I didn't do it. She was safe. I was at the office, and we kind of continued to work our way down here. Tried a couple long outs at different call outs for longs at different spots on the way down, but the big call out was at lows, to be honest. And I did something that I don't do. You guys all know I don't call tops and bottoms. I think that calling tops and bottoms is a terrible habit. Calling tops and bottoms is a loser's game in the long run. People who are trying to consistently call tops and bottoms in the market, I don't think that they can be consistently profitable. My approach has always been, don't call bottoms, don't call tops, call spots where you expect there is a high probability for a retracement in the other direction, and then have rules in place for how that retracement can become a reversal. That's what I always do, and I didn't do that today. I started typing into the VTF, I think it pretty much at 130. I really like longs here, and then you guys can scroll up in the VTF and timestamp it. I wrote at 139, I think we have a bottom here. And I was partially basing that actually on Tesla. The market extension is one thing that I was looking at. Where we were on coming into the daily chart was something that I was looking at for the SPYs, not really as much for the Qs, certainly for the IWM. And I was watching Tesla at that time. Tesla had bottomed out, and I watched Tesla create this higher low at 1 o'clock in the morning. So 1 o'clock in the morning. That's where my head's at after today. At 1 o'clock in the afternoon, and then get really tight here as the market was still making new lows. And as much as I love to see Tesla selling off in a vacuum, I almost feel like the Tesla selling, which has been insane, and that's as someone who I've basically never been a Tesla bull. Been a Tesla bear at certain points, and it's cost me money. But I still think at $125 that Tesla is an overvalued stock. But this degree of a move here from $175 straight down to $125 with not even a single bounce the entire way. I mean, this is going like what's the word I'm looking for? Parabolic. It's going downside parabolic here, and we talk about parabolic usually to the upside, but this is the rate of change in Tesla is increasing the more it loses price. That's the definition of momentum. That's the definition of what creates a parabolic move. It's also by definition not possible to stay, but it can happen. It can continue for much longer than you expect because momentum is a hell of a drug. So Pat calls out that fantastic call out on the bottom. I'm watching the market still make lows, but Tesla not make lows here at 1 o'clock. Builds out this little wedge here, and it was really at that point where I'm seeing if Tesla can break above this consolidation, and then the real conviction spot would have been if it could recapture this high, because then I would have a higher low and a higher high. So I really needed this thing to get above like 125.67 specifically, and it didn't do that, but it broke above this wedge at the same time as the market kind of gave this king and queen on the 5-minute chart. You got a little bit of a hammer here on the 15-minute chart that kind of came in, that closed green. And you know what? I did it. I wrote into the VTF at 139. I think this could actually be a bottom here, to be honest. And it was. I mean, the degree of the upside move impressed me. I didn't necessarily think we would retrace that much of the move to get back to, 380, close above 380. I'm not entirely surprised about it either. But it was a hell of an upside move there. I made back a lot of P&L in this move, thankfully. And at the end of the day, we're left with some interesting looking daily candles. The SPY daily candle here is kind of sloppy, to be totally honest. You do have a big downside tail, but you got an upside tail too. It's like kind of almost like a spinning top doji, but with not an extreme amount of extension. The Q candle is not ideal. I want this tail to be a little bit bigger. The IWM candle is great. Pat and I would go back and forth a little bit on this. Pat always wants these candles to be green. I personally don't care if they're green or red, because my thought process is if I have a very small body and a large tail like this, whether it closes green or it closes red, the principle of buyers taking control from sellers at that low still is in effect, and by the end of the day, you had buyers in control on the close, and what this candle means is that you are expecting those buyers who are in control at the close to be able to continue to have control into the beginning of the next couple of sessions. That applies for any time frame. With that said, you always want volume confirmation and extension confirmation. You don't have volume confirmation for the IWM. You don't have extension for the IWM. You don't have perfect confirmation from the Qs and the SPYs. But the IWM, if that wants to provide leadership, has been a very significant kind of signal for the entire year that we've been in. So we'll see. We ended up closing significantly off of lows. It was a really good close, a really good turnaround. Buyers are in control at the end of the day, and this is as we go into this Santa Claus effect period of time. And I said it for the last 3 days in a row. I'm not a huge seasonality guy. I recognize that seasonality is a thing, and I would describe it as a layer of probability at best. That sell in May and go away, the January effect, Santa Claus rally, all that stuff. There's a whole bunch of those things. I take all of them with a massive grain of salt. I mean, this calendar year was a perfect example, right? It started January, supposed to be a good year. January was abysmal in 2022. So that is just a perfect example. Sell in May and go away. We had like the biggest bear market rally of the entire year was in the summertime, and that honestly, that bear market rally in the summer like kind of saved my year, or made my year. So this year has been anything but normal. So I'm not necessarily expecting a Santa Claus rally to be able to come in, but we closed really well at the end of the day. We're coming into this a 7-day period where the average performance of this 7-day period is like 1.25% positive, when any other average 7-day period is like 0.2% positive historically, something like that. So we'll see if this candle can lead to a little bit of follow through on the daily chart with the buyers being in control over the course of the next day and weeks or whatever it is or not. The price action here is tremendously interesting. There's a lot of things that you can try to attribute this sell-off to. You can try to attribute it to Tesla. You can try to attribute it to tax loss harvesting. Maybe it's just that we've been in a bear market all year and we broke technically to the downside, and markets work in feedback cycles, and selling leads to more selling in certain situations. I'll leave that for the pundits on CNBC to say what they want on that. And it was a hell of a day. I went from like extraordinarily frustrated at certain points in the beginning of the day to kind of pleased with myself, to be honest, on kind of recognizing the low of the day and having risk on for that move into the close, and making a significant sum in that last couple hours on the day. So it's basically all I got for you. There were a bunch of trades I took today. I was involved in Ape pre-market at one point today, trading that. Took an AMAT trade today that ended up failing after kind of giving me, a break-even trade. Plenty of Tesla trades. Microsoft, Pat had a great call on Microsoft at this low. That low did eventually break, but this volume increase with this degree of extension at this time of day, this is the stuff that we want to pay attention to. I was able to get great pricing. Just above 235 on a buy in here, and was able to kind of capture a move there a little bit. So yeah, and looking at some of the other names that were holding in better at certain points of the day, looking at this S, looking at Snap, a few others that were kind of going sideways at certain points of the day when the market was able to continue lower, and then these were some of the ones that actually gave best bounces into the close. It's probably a good research process for people tonight to try to find names that were able to close green on the day. XBI was a sector that was able to, close green, the biotech sector. Snap was able to close green, or even if it didn't close green, things that maybe performed, like we were just talking about, like how the IWM is better than the SPYs and the Qs, but it's still a red hammer. You could probably find stocks out there that showed enough relative strength out there where they were actually able to kind of give green hammer candlesticks on the day, and those are probably going to be some of the best ones to look at tomorrow to see if we can get follow through. And getting that follow through is going to be difficult because we're not. I want us to be more extended. I wish we were more like here with this degree of extension, you can get that couple day bounce, even a 3 or 4 day bounce. Here we don't have that same degree of extension, but we have the seasonality effect. We closed well, so we'll see how we gap tomorrow, and how that plays out. I don't know who the heck could still be long in this market after this kind of down move, which that thought process actually makes me more inclined to think that there's even a higher probability of an upside move. Whew! Is the top tail on the SPYs false? It might be. What's the intraday high? 383.40. Yeah, it is. I hate when that happens. I really do. We get these false tails sometimes in these daily charts. Okay, so that actually makes this candle look better. It's more of a doji here where more than half of the candle is a tail, less than half of the candle is the body. Again, ideally it closes green, but my thought process, I care less about the color being green or red on a hammer candlestick and more about the percentage of the candle that's a tail and how it closed. If it closed on highs of the rally, that's the signal. When you're doing technical analysis, you're really trying to identify supply and demand, right? And I want to know who is in control at the end of the candle. Buyers are in control at the end of the day today. They close us on the highs of the afternoon rally. So that means that there could be follow through tomorrow. That's all I got. Happy to answer any questions from Jack. Was long Tesla several times today, it looks like. 931, 936, 1015. All three stopped me out. I was so angry by the end that I just stopped trading. Any advice for either flipping short after being stopped out or having the gut to wait for the bottom? Sure. So first thing I would say is do a review of your trades. Make sure everything you did was actually a trade. The 931, the 936 trade, I'm not sure if I see it. I definitely don't see it on a 5-minute chart. So I'm not sure where it was at. For me, I did start pretty early, but it was like a baby feeler position that I didn't mind bleeding out on as I waited for a signal to get heavier. For me, the signal was like these lows. So, if you tried off the 940 low and you got stopped out at 945, I get it. That's actually what made me like the 945 candle. Like a lot of the times, like we always want our bottoms to be like perfect, right? And sometimes they are. You know, like this was pretty good here. Maximizing volume, hammer with the tail, leading to upside price action. That's the bottom. I'm disappointed, honestly, by the lack of upside follow through with Tesla into the close as per the market. Someone's still dumping stock in this thing. I feel like with what the market did with that rally into the close, and the degree of extension that Tesla has in the daily chart, going from 175 to 124 in a handful of days, that this thing, with the market's help, really should have been able to wrap back up to 130. And it just didn't do that. It did not give the follow through at all. But the point is, we always want this perfect, magical, candle at the bottom on maximizing volume. Sometimes you get that. It's also not unusual to kind of see these multiple candlestick tails coming in, where like one breaks the low of the previous like that. I like that as a long setup because people that were long off of this get shaken out. And the reason why I put this trade on here at 945 was because this candle had a tail. That candle's low broke. The follow through on that low was very minute. Like, that should lead to the next cascade to the downside. Everyone's getting stopped out. The next wave of selling comes in. When that doesn't happen, like this low here is 132.46. This low here is 132.28. It's 18 cents lower. It shouldn't be 18 cents lower. It should be significantly lower than that. But all this is, that 18 cents, is people who had a stop loss at the low of the 940 candle because they saw a high volume hammer and they went long off of it getting stopped out at that low. That's what that is. When I see that happen, that actually makes me like this long even more. Those people just got shaken out, but there was no actual follow through. That means that there was no true selling. The only selling that occurred below the 940 candle on the 945 bar is people who had a stop loss at that 940 low. Not real sellers just continuing to massively sell it. So when I see that, and it requires a very fast execution, and I did call it out to you guys through the radio, I want to buy back through that low for that 20 cents worth of risk. The risk is so small here. The risk is so. This is another one I was very disappointed on the outcome on the trade, but I can't control the outcome on trades. All I can do is control my process in regard to the price action. So that's the trade I love. I'm taking that back through that low. Sometimes you get those multiple tails. The fact that they shook all those people out with that 18 cents worth of slippage will actually mean that it can make the stock go up even more easily. And you see that very fast reverberation back to the upside. I'm trying to take advantage of that. And again, the upside follow through is just a snapback to equilibrium that led to a failure. I think VWAP, which I don't have on my charts here, but one of you guys told me VWAP's at 134, ADMA was just above it. We got to 133.90 and then we failed back down. So if you went long off the 940 candle and you got shaken out at 945, I actually really like that trade. It's unfortunate, it happens. If you went long on the 945 candle with me, I really like that trade. If you're going long at 931, I don't see a trade. If you're going long at 936, I don't see a trade. Maybe you're looking at 1 minute charts, maybe you're looking at 2 minute charts. I don't like 1 minute charts. I don't like 2 minute charts. I don't look at them. I don't look at anything less than a 5 minute chart, except for I know Paul is out there somewhere who is like, but Derrick, that one time you looked at a 2 minute chart. Yes, fine. That one time ever I looked at a 2 minute chart. I really want that setup to actually be able to come in. And then 10:15 here. Honestly, don't see a setup at 10:15 either. I don't see, you had this consolidation here. This is technically a bearish consolidation, but it could break to the upside. But you want an inside 5 to come in or something like that breaks to the upside for the trade. If anything, by the time 10:15 comes around, I'm annoyed because it should have broken up already. This break higher here, maybe you pull back real quick and give a higher low and then snap back through and get to the 21 EMA. This thing should not be sitting here at 10:15 still going sideways. This is a bearish consolidation. So I know that none of what you're saying here is actually even your question, but I just want to kind of go through your trades a little bit because you're bringing them up and I don't like them. You should go through your trades on your own as well. Really check your premises. Make sure that they were actual trade setups that you were getting involved in, that you weren't just hoping because the stock was so extended that you can buy it and kind of be involved in it. which I get that, but that goes back to, I think we were talking about this yesterday. That's a piece of information, not a trade. I get the pieces of information. That's why I was in the stock too. But you need to have the actual trade to be able to be there. Like everything, I'm just sitting in this super light, and that's not right for everybody, by the way. And some of you have really big accounts, and you can afford to have a feeler that's very small, and let it bleed against you even for $10. Many of you cannot. But the real trade is, again, it's this trade when I'm getting heavier. And then I didn't do anything with this thing here for the rest of the day because it was atrocious, honestly. And then Pat had these great callouts at the bottom. But let me actually answer your questions a little bit more directly. Any advice for either flipping short after being stopped out or having the guts to kind of wait for a bottom because you were upset? So the most important thing is that you're following your money management rules. You have to have rules in place for everything that you do. It's the only way that you can be a consistently profitable trader. So the first thing you should be asking yourself is, after 3 losing trades in a row, should I still be trading? And maybe the answer is yes, maybe the answer is no. It depends on how much risk you took on those 3 trades. It depends on if you have other trades that worked out for you that maybe you were involved in it at the same time. But there's a very real situation here where you shouldn't even be trading anymore because you had those first few trades that all failed for you. And I'll tell you what, I don't care if every single trade that you woulda, shoulda, coulda taken after you told yourself I can't trade anymore all worked. That doesn't matter. That's the worst thing that a trader can do from a psychology perspective, is get involved in trades like that, where they're violating their money management rules. It's a recipe for failed business, honestly, in trading. So the first and foremost thing is, what are your money management rules telling you? Can you still trade? If the answer is yes, then you need to come up with setups. And I think we talked about this a little bit yesterday too. It is not a good idea to just short because you got stopped out of a long, right? We talked about this. Flipping for me is a very hard thing to be able to do psychologically. For me, sometimes the best thing to be able to do is just recognize that my idea was wrong and step away so I don't get hurt. There's a few really good traders who can also recognize that not only is my long failing a signal that my long is failing and that idea is wrong, but in fact, in the process of my long failing, a short setup actually came in. You can only go short in the same way that you can only go long if you have an actual trade setup that is there. So the real question is not, should I be going short because I was getting stopped out of my longs and I'm frustrated? The real question is, do I have a short setup in a weak stock that I should be taking? And once again, I don't care what the result of the stock is after the fact. We can all point to Tesla right now and go, well, this was very obviously a bearish consolidation, and I could have shorted through lows here on this bearish consolidation, and I could have made $1 billion by being 20x my maximum buying power and crushing it down $10. I don't care. I don't care. The question I want to ask for you is, at 100, what price about is that breakdown? 132. Tesla at $132. With an 80 EMA at 146 and a 21 EMA at 163, should you be shorting that stock? And again, I don't care that the stock went down $10 more after that. Should you be shorting a stock that's $10, or whatever I just said, even more than $10, right? It's $145 stock that's extended by at 132, extended by $14 just from the 80 EMA. Let alone the spread now between the 8 and 21 EMA. Should I be shorting a stock that just went from 175 to 132 and now I'm shorting 132? And honestly, the answer is maybe. It depends on the type of trader you are. It depends on the approach that you're implementing. If you're like a pure momentum day trader, then maybe there's a momentum trade to the short side here. And you're the type of trader where you can ignore that daily chart a little bit because you just trade pure momentum and you're like, what, there's a bearish consolidation and I can short that break. So maybe there's actually a trade here when lows break and you're giving it to the previous pivot high. So in that case, you'd be shorting 132.28 would be the short, the break of this, and your stop loss is going to be this pivot high that the ADMA caught up to, which is the high of this bearish consolidation. So you are shorting 132.28 with the stop loss at 133.90. So you're risking $1.50 on that. There's no way I'm personally taking that trade. There's no way I'm personally taking that trade. I'm not putting on $1.50 risk to short a stock that is, you know, $13 extended from the ADMA on the daily chart on its day 10 down in a row or whatever it is. And that's just someone who is about as bearish as you can be on Tesla, thinks that the stock is overvalued. I'm not taking that trade, but that's my approach. That's me personally, and my way is not the way. And maybe your way is, you know, hey, I'm a momentum trader. I'm focused on these small time frame trades, and then fine, you can take that trade. But you know, you really want to check all your premises here. You know, even the way in which you're asking the question, I was so angry by the end that I just stopped trading. Should I have flipped short? No. Stopping trading was the best thing that you could have done for yourself. If you're furious and you're on tilt because you just had 3 longs in a row, maybe you're beating yourself up. You know what? I hope that you were beating yourself up because you were recognizing after you got stopped out that you didn't even have real trades. Not to overly beat you up, I really appreciate you putting yourself out there, because Jack, I want you to know that your question is helping all 100 and whatever people here that are, you know, currently following along with our afternoon meeting right now. So I really appreciate you doing that. But, you know, maybe you're furious because you're beating yourself up because you took 3 losses on trades that weren't even trades because you weren't even looking at the market right. You weren't waiting for the setup to come in, and you're furious with yourself. The best thing you could do is stop trading. The best. I had a rule for myself for years that when I would start kind of going on tilt with things, that I would step away from my computer, I'd go for a walk around the building, I'd come back up, I'd cool myself down before I would allow myself to begin to trade. And again, one of the biggest things that is a progression for me over the course of the last, at this point, probably 5, 6, 7 years, is that while I still do get very emotional trading, I really don't let it actually affect my decision-making process. That's been like one of the most positive things I've been able to do for my own trading over the course of the second half of my trading career. Because the first half of my trading career, there was a problem. So, Jack, really appreciate the question. Really appreciate you putting yourself out there. Hope I didn't beat you up too much on it. But, you know, you're making yourself a better trader, and you're making everybody else a better trader by asking it. So I appreciate it. From EJW, would you speak to tax loss harvesting towards the end of December? Would you speak to tax loss harvesting towards the end of December? What might that look like with portfolio managers rebalancing on the markets? Also, is it just for retail accounts, or do institutions also need to close short positions by the end of the month? I've never heard of that before. I don't know how it works for retail accounts, but I've never heard of having to close short positions out, like having to, being required to close out short positions by end of year or end of month or anything like that. I've never heard of that. I'm like very confident it does not apply on the institutional side. Maybe there's retail brokers out there that require that. I really don't know. I haven't heard of that before. On the tax loss harvesting side of things, another area that I'm not an expert at, my understanding is that is usually typically completed by the end of this week. And that people are not really kind of doing that on the last week of the year. I think that actually has maybe something to do with the Santa Claus rally. So the Santa Claus rally is front running of the January effect. The January effect is people reigniting longs after tax loss harvesting into the end of the year. So what you used to see historically was that mid-December, actually this period right now, I think actually historically is a bad time for the market. I think the beginning of December and the very end of December are historically good periods of time for the market. So that's interesting because as far as seasonality and calendar effects that I just finished bashing, this is almost kind of similar, where, you know, we weren't strong in the beginning of December, but we held up a little bit better. The real weakness here came in the midpoint part of December, and now we don't know what's going to actually happen next week. But the January effect is people did their tax loss harvesting into the end of December, and then they take that money and they put it to work in the beginning of the new year. That's what the January effect is. That tends to create a strong January. The Santa Claus rally is that everyone in the market learned about the January effect, and they decided to start front-running the January effect by buying in the last week of December, and that's what is supposedly creates that. So I think that most tax loss harvesting is done by the end of this week, and that's actually one of the things that creates that Santa Claus effect historically that, you know, tends to come in for the last 5 calendar days of December and the first 2 days of January. Not sure how that works with the fact that the market's closed on Monday. Like, does that mean that the Santa Claus rally calendar seasonality effect actually starts tomorrow? Or does it mean it's just a shortened period of 6 days instead of 7 days because Monday's closed? I don't know. But hope that answers your question. From GF, I think that the top. Okay, yep, we did that already. From my man Denver Steve, how technically significant do you assess Ford 1110? We got big support. We got big support here. What's this tail low? 1060, 1113, 1118, 1114. A couple days ago, 1112. Today, 1110. So it's a little bit loose, like all support levels are. I would call this support as roughly the $11 area. That's kind of how I usually do it. Usually kind of just spread it out a little bit. Yeah, I mean, it looks like a very technically significant support level, even going back into April here. So yeah, for sure, and it's I love longs on extended stocks into support. It's definitely a trade that I like, especially if I feel like the market can be on my side. So yeah, what I don't like is that Ford didn't close better today. I want a little bit more of a tail. I want a little bit better of a rally here, but it looks like car names in general are just very weak. Ooh, look at I didn't realize CarMax snapped back this much today. No follow through on that short setup we discussed in the morning meeting today, where that ADMA catch up didn't work. Some of the other things from the morning meeting worked really well though. The CLF off the open was incredibly strong, really nice trade. Micron perfectly held that. Ooh, it eventually broke it. I was about to say it perfectly held that 4850 support, but I see here that it eventually broke it. So yeah, we can watch Ford for tomorrow. I wish it rallied a little bit better off the level today. FedEx for tomorrow. So strong. Wow. Yeah, I thought the earnings report was decent. It wasn't great, but the market, was treating it well in the morning, but then they sold it off and now it really rallied back today. I really like that actually. What did Nike do today? Ooh, Nike really bounced back today too. This is exactly what I want to see. This is exactly what I want to see from earnings reports. I think that bodes well for the entire market. From JK. Went long XBI on the 1120 candle. Okay, I see it. Little intraday breakout here that you're looking at. Thinking a breakout, but I got stopped out and I was uncertain and didn't try again. Was my execution just the wrong timing? Do you think that the thought process was right? I should have just been more patient. So I think that the thought process was right. I'm curious to know what your stop loss was, but I think that the thought process was right. Let me know your stop loss if you can. I think the thought process was right. I think that you identified a sector. Like, I was looking at a lot of things like this that were going sideways at this time of the day as the market was just getting destroyed and continuing to deteriorate, or if the market could just give me a dang bounce and these things could break up and really be the leaders. Didn't necessarily mention XBI specifically, or maybe I did. But I was looking at like S I mentioned, Snap I think I mentioned, DKNG I was mentioning how this was kind of holding here. Again, all of these kind of eventually failed just because the market was just so atrociously weak. You had no support from the market. What was the market doing at 1120? Yes, when the market was consolidating, and maybe this could have rounded up or broke up, but it once again failed. This just turned into a big 15-minute correction. I remember this was when I was getting off the radio and I was typing into the VTF like, wow, this is just a 15-minute time correction for the market, which is super bearish. We might get another leg lower, and we did get another leg lower. I really like your thought process. You identified something that was holding in, acting strong in the market. You looked at the intraday resistance. You bought on the way up after you got the confirmation of the break. I really like the thought process. I think the market caused it to fail. I do want to make sure that you were using the right stop loss because the stop loss is tricky on this. I really think that the right stop loss on this trade, I don't think you can use like an ignition bar low because this is not an ignition bar because it's intraday. It's an intraday resistance level. There's no volume confirmation when the candle broke. The right stop loss is the low of the day. Maybe you could use the 1110 low because it's a little bit of a pivot higher low situation in there. Has to be one of these two as your stop loss. This thing tried to hold in so well, and then eventually the market just got to it. But you're totally with the right thought process, the right name selection. There is no surprise at all to me that XBI closed green today with how well it held in. That further confirms that you had the right name selection on there. It was just that important layer of probability, which is the market continuing to deteriorate, cause your trade to fail. But otherwise, I love everything you did. Stop was 81.17. 81.20 is that low. 81.11 is that low. So I think that the right stop is either 81.19 or 81.10. You're at 81.17, just somewhere right in the middle. Fine. You were broadly giving it to the right area here with these two pivots. I would just specifically choose one or the other, but it's a great trade. I love it. Market just caused it to fail, which is important. But good stuff. Thanks, Jack. From EJ SWBI. Yeah, they're getting added into the S&P 400. Another really strong one here. Ooh, right? They are getting added. Am I right on that? Oh no, maybe they're not. But we talked about this one in the morning. I think I have it confused with something else. But yeah, really good snapback on relative strength. Somebody asked about this in the morning meeting. I said you can go long through $8.47 on the relative, not on the relative strength, on the extension. I don't like that it broke that low first, but still okay and closed really well. From Brandon, tomorrow's going to be fun with PPI tomorrow. I think we have PCE tomorrow and consumer sentiment. I got on here kind of late, but why do you think we sold so hard today? Yeah, that's the real question. Why did we sell so hard today? I don't have an answer for you. I could postulate a few. One is very simple. We're in a bear market. We snap back to the ADMA. We had numbers come out at 8:30 this morning that the market did not like. That's what set off the initial selling. But it set off the initial selling in an area where we should sell. Because we snap back to the ADMA, we snap back to equilibrium. The market is bearish. You're no longer extended here. So the economic number came out at 8:30. It hit us down in a market that was already should be selling, to be totally honest. And then that follow through just continued. The follow through could have continued for a multitude of reasons. Tesla could have been part of it. Tax loss selling definitely could have been part of it. And then we had that big turnaround into the close. So that's why I would think that we sold so hard in the first half of the day today. From Scott, negative 33 degrees in Ennis this morning. Whew, man. I hope it warms up by New Year's weekend. That should be when I get there. I think I said it already. I'm going to drive, I think, to Indianapolis on Monday and then do the rest of the drive the following weekend. So hopefully it warms up a little bit by New Year's. Good luck to you, Scott. Hope you're Hope you got plenty of firewood. Hope the heat's running properly. I remember the first winter that I was in Idaho there in February. I had an issue with the. That's when we had just gotten the house. I had an issue with the boiler there, the heater, and it was terrible. The furnace was out and the hot water heater both went out simultaneously and coincidentally. And I was having to wake up at 1 o'clock in the morning because it was so cold that it was waking me up, and go out into the garage and manually turn on the furnace because it was the only way that you could kind of do it. It's brutal. But that's part of life. It's fun. It's fun in hindsight, I guess. Thoughts on AXSM? Oh, it looks great, this thing. Yeah, this looks great. It's definitely come across my radar before. Not sure if I've ever actually really traded it. Love how it's holding up. Love how it's digesting. Love the relative strength. Love that it closed green. You want this to break up here out of this pattern, but I think it looks fantastic. It's supposed to be positive 38 Sunday. Nice. Michael got his first day in at Stratton. Nice. Sunday was pretty good for East Coast. Yeah, I skied Hunter Mountain on Saturday and Sunday last weekend. It was insanely crowded on Saturday. They don't have the whole mountain open. Sunday was a little bit less crowded. They had powder. they had some snow for out here. It was a good day though. Definitely had some fun with some friends. All right. Anybody else? All right, I guess we will wrap things up. Would you repeat what you said about tops and bottoms? My internet cut out. Yeah, for sure. Tops and bottoms is picking tops and bottoms is a fool's game. It's a great way to be consistently unprofitable in the market if you're trying to predict tops and bottoms. It's not my approach, even though I did it today and I actually did it successfully today. My approach is to look for places where there is a higher probability of a retracement, and then have rules in place for how a retracement can become a reversal. If you want to know what those rules are, you can look at my candlestick class if you have access to it. That's where I get into it. I talk about the hammer capitulation buy setup, and then I talk exactly about this, how that upside retracement can actually become a reversal, and what you want to expect from that trade. You want to expect that it's going to fail, and calling out bottoms and saying, hey, this is the bottom, and expecting a full-on reversal. It's a very low probability situation and will generally only cost you money in the long run. But today I did it. Today I called out a bottom. I literally wrote it into the VTF at 139. I think this is the bottom. So, yes, Tim. The entire root, the entire structure of my approach to trading is based on 3 definitions. Everything that I do in regards to trading can be broken down to these 3 definitions. The definition of a trade, the definition of trend, and the definition of momentum. And I take those definitions literal word for word. And I have them memorized. I think that everybody should have them memorized. Oh, thank you so much. I appreciate it. What do we have here?
Cranberry vodka and lime juice.
Ooh, very exciting. Thank you.
Boy.
Cheers, everybody. Yeah, so I have 3 definitions that are the root of my trading. Everything breaks down to this. Thanks, Francisco. 1, definition of what a trade actually is. The definition of a trade is something with a technical reason and a technical out, aka stop loss. You have to have a reason for the action that you're taking, and it should be based on technical analysis, right? Why you're buying, why you're shorting, and it also has to have a technical stop loss. If you've only got one, maybe you have a reason to buy, but there's no appropriate stop loss, it's not a trade, right? You have to have both. and that's how you're able to define what your risk is and what you're doing. If what you are doing in the marketplace is you initiate a position does not have a technical reason and a technical out, it is not a trade. It could be an investment, it could be gambling, it could be something else, but it's not a trade. So that's the definition of a trade. The second definition is the definition of trend. An uptrend is a pattern of higher highs and higher lows. A downtrend is a pattern of lower highs and lower lows. To me, that definition is more important than your trend lines that you can draw on a chart, because you can violate a drawn-out trend line but not violate the definition of an actual trend. To me, it's the definition that's important. Though I do pay attention to trend lines a little bit, it's the definition that's key. And the third is the definition of momentum. The definition of momentum is Tesla. Tesla on the daily chart. The definition of momentum is, really this applies on the upside, the way I say the definition, but you could just reverse it for the downside. The definition of momentum is the greater the price, the greater the demand. It means that the more that the stock goes up, the more people want to buy it. It creates an effect where as the stock moves up, it goes up even faster and further. That's what momentum actually is. And right now we're seeing in Tesla downside momentum. It's the opposite. As the price declines, more and more people are rushing to the exits. I love momentum. It's an incredible phenomenon. It's brought on purely by human behavior. So anybody who likes to tell me that the market is rational, the market is rational, I think, in a very, very, very big picture. The market is not rational on a day-to-day basis, and that actually is what enables us as traders to be able to have advantages that can make money. Because if the market was rational, momentum would not be able to exist. Why are more people selling Tesla as it goes down? They're selling it because they're afraid because it's going down. That's not rational. It's trading based on emotion, but it's what people do. Oh my God, I'm losing so much money. I have to get out, right? Otherwise, if you're selling at $124 today, there's no new news. I mean, I guess there might have been a little bit new news in Tesla on the increase in discounts, but for the most part, if you were rational, what really changed between Tesla at $125 and Tesla at $175? What has really changed in this period of time? Not a whole lot compared to the value difference of the stock. If anything, if you're rational and you're long Tesla at 170 because you're an investor and you think it's a good company, you should be ecstatic that it's at 125 because you can buy even more. Well, that's not what people do. They do the opposite. They get greedy as markets go up. They get fearful as markets go down. And that is what can create momentum. And that's what can create these like parabolic type moves that, you know, as this thing is moving down, the slope is continuing to, you know, increase here and it goes down even further. So everything I do, you know, comes back to trade, trend, and momentum. I think everyone should memorize those definitions, you know, tattoo them on your soul, and take it from there. All right, everybody. Have a fantastic night. I'll see you all tomorrow. Tomorrow's going to be Friday, the last day of a hectic week. And thanks, Jack. And that's it. Take it easy, everybody.